Welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We will go ahead and get started in just a moment. Just give us a minute to go live on all the different platforms. We are streaming on YouTube, Facebook, Instagram, and LinkedIn. So let's give it a minute just to go live everywhere and then we'll get started. We put the chat up on the screen if you want to drop a comment there in the chat. I see some people were already commenting. Thank you everybody for tuning in nice and early. We will get started here in just a moment. Hope everybody's been having a great week so far. Just give us a few moments here. All right, thank you everybody for commenting. I still don't know who the mortgage wizard is. They're commenting, but I like the name. Thank you for tuning in. All right, it looks like we are good to go, so we can go ahead and get started here. We'll take the chat off the screen, and then we will get into it. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche. What we do every morning on this webinar is go through the rates for today for actual live loan programs. And then we do a deep dive into a different topic every day. Our topic today is going to be very basic, which is conventional loans. And I don't think we've done this since we first started the show. So it'll be good to go back to it. So we'll do a deep dive into that in a little bit, but what we'll do first, like we do every morning, is Nick, let's go ahead and pull up our pricing tool and go through the rates for the different programs today so we can see what the market is looking like this morning.
All right, let me switch my screen and we'll get started. All right, so as Kyle mentioned, this is our pricing tool for our mortgage professionals. This will show us the general rates and the APR with all the fees for today. It is June 21st, just after 11 a.m. Eastern, so all of our standard programs are live. If you would like a full loan estimate with all the charges broken down that go into the APR, please get with one of our team members. We have over 300 licensed loan officers, and we're licensed in 24 states for primary and second homes, and we can do our DSCR business purpose in 44 states. So for today's demo, we will set up a scenario. Let me zoom in just a touch more. We'll set up a scenario here that we'll use for all the demos of a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is our typical request these days. And we're going to compare our conforming conventional programs to our FHA as the second option. And then we'll check out our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs. We don't do the VA or USDA live. VA is only for our eligible veterans and active service members. If you are, please let us know. We'd be happy to quote it, but not everybody is, so we don't do that live. And same with USDA. We did an example yesterday of the USDA options, but that's only for properties in USDA areas. So we don't do that live since most people aren't necessarily shopping in those areas. So for the first demo, let's set up conforming conventional. We'll set it up as a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all of our demos, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with those basic settings, let's check out the conventional rates this morning. So it looks like a touch higher than yesterday. Yesterday we were a touch under 7. Today we're a touch over. So 6.875 rate for 0.875 discount points and costs puts our final APR just a touch over 7 at 7.037. So yesterday afternoon it actually went down a little bit, and then towards the evening it went up a little bit. So we're back at about what we were before. So these are great options for our customers that qualify for conforming conventional, but many times our customers might need a little bit of extra help. So typically the next option that we look at, set up the same exact scenario, is we'll compare our conventional rates to FHA. FHA does allow a little more leniency on credit events and definitely has a higher debt to income ratio we can go to. So typically FHA will allow a little more flexibility if our borrowers are having any trouble qualifying conventional. We'll keep everything else exactly the same. That way we can compare apples to apples across the different programs. So let's check out the FHA rates this morning. Looks like those went up a touch from yesterday as well. Best option here is 6.125 rate for 0.75 discount points in cost and a final APR of 6.709. So in this case, for our customer that might qualify for both conventional and FHA, FHA is actually a touch cheaper here because the APR does include the upfront mortgage insurance and yearly mortgage insurance. So that is a great option for our borrowers that are out there shopping. Definitely don't lose sight of the FHA options. And in this scenario, it might actually be a little bit cheaper. Now, if our customer doesn't qualify for conventional or FHA, many other banks or lenders don't have other options, but that's where we love to shine here at the Mortgage Calculator, where we have over 5,000 other loan programs besides the standard, and that's under expanded guidelines, aka non-QM. And everything else will stay exactly the same, but you notice we have a new option with non-QM where we can select alternative income. So full doc is 2 years of tax returns. That's typically what's required for FHA and conventional. So we would typically choose the non-QM expanded guidelines to select one of these alternate options. We have options for asset-related programs, business bank statement programs. For our investment properties, we have our DSCR. We'll go over that in a minute. And personal bank statements, 12 months, very popular. RSU, stated, VOE, 1099, P&L, no income at all kinds of different options. But for our demo today, the most popular option by far is going to be our personal bank statement 12-month. And that's going to be for a self-employed borrower. Many times our self-employed borrowers submitting 2 years of tax returns have write-offs and whatnot, and may have a hard time qualifying at all or qualifying for as much income as they really want for the home they really want. So in this case, we solve that problem by, instead of using tax returns, we're just going to use their last 12 bank statements to determine a debt to income ratio, in this example of 40%, using their actual cash in the bank, their cash bank situation. So instead of using tax returns, typically our self-employed borrowers will qualify for double, triple, even quadruple the income that they would on tax returns. So this typically allows them to get that home that they really want. So let's check out the non-QM bank statement rates this morning. Awesome. So very comparable here. The best option the computer found for a bank statement, 7.25 rate for 1.5 discount points. That program is a little strange, but it comes in at an APR of 7.333. So a little bit higher cost than we asked the computer necessarily, but a great option because it comes in at the lowest APR overall. So 7.333, just a touch above conventional. So again, we love when non-QM and conventional get very close because there's definitely a lot of flexibility with non-QM. And remember, conventional was just over 7. Now non-QM here at just 7.33, almost exactly the same cost. And our borrowers get a lot more flexibility. Many times our self-employed borrowers get double, triple, quadruple the income. So a lot of times if you can present these options to your customers and present a better option here with non-QM that just costs a little bit more, that will obviously get the deal done because you have the income you need and satisfy your clients. So definitely recommend check out all these options. If we scroll down here, notice there are a ton of different options here on the bank statement. Some of these at higher rates may allow things like credit events like foreclosures and bankruptcy and other loopholes. So a lot of flexibility with non-QM, not just on the use of bank statements, but we have a lot of other flexibility as well once we get into these hundreds of different programs that we can use bank statements on. Now, before we go into our deep dive, we always want to do some live rates for investment properties. So if we set this to investment, we're going to compare our options here. We'll set up the same scenario, 80% loan to value, 20% down payment, and we'll simply compare our two investment property options. We have conforming conventional rates, and we'll check out our expanded guidelines, aka non-QM. Remember FHA, VA, USDA, those do not work for investments. So we'll simply check these two options out. First up, conventional here. Everything will stay the same as all our other demos. The only thing we've edited here is the occupancy to investment. So let's see what the conventional programs have done for investments today. So as we say every morning, unfortunately, there are no one discount point options. The government, GSE government agencies that operate these programs have added penalties for investment properties and second homes. So the best option the computer found, 7.25 rate for 3.5 discount points. That's a lot of money. And a final APR of 7.5. So these are good options, but a lot of times our investors would like an option for one discount point as we asked. Fortunately, conventional programs don't offer that at the moment because of the penalties they have added. So 3.5 discount points is often a little too much for our investors. They would like another solution. And in this case, that's $14,000. That's a lot of money that an investor can deploy into another investment. So I definitely recommend all our investors out there, all of our LOs out there, anybody looking for an investment property, definitely quote conventional, great options, but our non-QM options are going to solve that problem and other potential problems as well. So for our last demo, we'll set up investment property, ADLTV again, and we'll set it to expanded guidelines, aka non-QM, where we have our new options. So for an investment property, the most popular income option by far and our most popular loan product by far here at the Mortgage Calculator is our DSCR loan. And that's because it doesn't actually require any income or employment from the borrower. We're simply going to use the estimated rental income from the property that we're purchasing in this example and determining a debt service coverage ratio using that. So a debt service coverage ratio of 1.00 or higher means the estimated rents will cover the PITIA of the mortgage we're doing here, aka the property cash flows on a monthly basis. But we also even have options for DSCR ratios under 1.00, aka the estimated monthly rents don't quite cover the expenses, so the property doesn't cash flow on a monthly basis. So we have options for all of that. So for our demo, we will go ahead and leave this blank so that we can show all the different options. And the final thing that we have to select here for non-QM investment properties, a prepayment penalty is standard. 3 years is the standard option, so that's what we'll select for our demo. We can choose 0, that will cost much more and limit the loan program, so we don't do that in our demo, but it is possible. And same with 5 years. Not all loan programs allow 5 years. When they do, it saves us a little money, but it's less common, so we will choose 3 years so we can see all the most common options. So with these settings, let's check out the DSCR rates today. So obviously DSCR is going to always be higher than conventional on the rate, so 7.875, but we've solved the problem for our investor of saving them cash out of pocket, 0.85 discount points. Big difference from 3.5 discount points to 0.85. Most investors don't mind going up in rate a little bit if they can save cash out of pocket. So in this case, the APR, final APR, 7.937, so a little bit higher, very comparable though to conforming conventional. And we get a ton of flexibility with DSCR, no income, no employment. That means our investors can do 1, 2, 5, 10 loans at a time because none of them require employment or any income verification. We're simply going to use the rents. So our investors can refinance multiple properties to purchase multiple new investment properties. A ton of flexibility here. And if you'll notice, we have a ton of different programs with different DSCR ratios, as I mentioned before. If we scroll down here to the hundreds of different options, we'll see some with different prepayment penalty options. And we'll see some of these maybe at the higher rates may allow things like short-term rental income or foreclosures and other credit events. So ton of flexibility here with DSCR. Definitely recommend any and all investors out there looking to do a new purchase or a refi. Definitely consider DSCR if you have an investment property. Now, let me get into our examples for today. So let me switch my screen again. And today's topic, conventional. So real easy. We already did a couple examples, so I don't need to go too much in detail here. We'll make it pretty short and quick. But I want to highlight a couple useful examples. Tomorrow, or maybe it's not tomorrow, the next day, we're doing a one-time close example, so I'm not going too far into the rehab or construction realm, just doing a couple standard examples, but I want to pull those up for everybody just to check out to see the other ways we can use conventional loans. So let me go ahead and pull up my examples here. So the first example, the most common example, most common use of conventional loans, I'd say most of the conventional primary purchase loans are usually taking advantage of the 95% LTV max. So in this case, we don't do the higher LTV demos live because we have to estimate the PMI. But in this case, I use the same numbers as in our demo. So a 760 FICO was our estimate, a 40 DTI was our estimate. And so putting those numbers in, I was able to get, I don't know if you can see it here, but a PMI factor of 122.71 per month. So that needs to be considered, obviously, when we're going above 80 LTV. Anytime we go above 80 LTV, we need to add the PMI here for conventional. So that's why we need to do this on one of our deep dive examples. Now the rates are very comparable. We'll scroll down here. In this example, again, it was 760 FICO using all the same as our demo, and a 500,000 purchase price, 25,000 down payment, final loan amount of 475. And the rates were about similar to what we saw on the show. Our one discount point rate is, right around here, 6.75-ish. So pretty much the same as on the show. If we go up to 7.25, that's the quote unquote par rate for no cost. And we can buy it down all the way to 6.25, even just putting 25,000 down. A great option here if our customers want to spend some of their funds rather than on down payment to buying down the rate a little bit. You can also do obviously the 2-1 buy downs and other things like that on conventional and get kind of tricky, but this is our basic example. And if we scroll down here, we'll see the mortgage insurance monthly was added to there, our fees and all that kind of good stuff. So you can see this was actually taken into account. Now, the other example that I want to do is typically we get requested for investments. Pretty common. Our investors are out there. They'll very easily compare a conventional to a DSCR. So not as hard to convince our investors to look at other options. However, many times we get requested for second homes, and unfortunately, the conventional loan programs have added penalties. So as I mentioned every day, we don't do second home demos on the live pricer, but second homes and investments have the same penalty that have been added to the conventional loan programs. It's a very hefty loan level price adjustment, aka I like to call it a penalty essentially. They've increased the price for all investments and second homes, basically to discourage people from doing loans with conventional programs for those products. So unfortunately, even though the max LTV for a second home is 90%, which I would love to do that demo, however, we can't. So the only legal options that we can quote end up being at 75 LTV for a second home. So there are options out there, but because of all these extra fees and because a second home still has to, you can't buy it down as much. There's a lot more rules on the fees and stuff like that. So unfortunately, there's not a lot of legal or compliant options because of these additional fees that the GSEs have added to conventional programs. So even though we legally can go up to 90 LTV, we can't compliantly offer a rate on a 90 or an 85 or even an 80 LTV second home just because of these penalties that have been added to these programs. And unfortunately, conventional doesn't go up higher in rates like non-QM does in our example, where we can find options at one discount point. So we have those same limitations that we highlight every day on investment properties. We're running into those here. So 75% LTV, we still get great conventional rates, obviously, but we're now limited to the 75 option. I did run it at 90 and 80, and unfortunately, there was literally no options that would allow us to pass compliance and still do this quote. So the best option today, of course, maybe, later this week when rates go down a little bit, we might have some compliant options at a little higher LTV, but I definitely recommend if you're out there shopping for a second home, I am very confident that you will be pleased with the non-QM options because of these limitations. Now, non-QM can go up to 90 LTV and 85 and 80 and all of the above because we have less rules on non-QM. And of course, they go higher in rate, so they lower the fees, and therefore we have compliant options. So in this option, though, some great stuff here. So there's no zero cost or par option here for a second home because of the additional fees, but 7.375 is the lowest option here. And the most we can buy it down compliantly is 6.875. And with this loan amount, that's just under 3 points in discount. So that's a lot of buy down there. So in this example, again, 500,000 purchase, 125,000 down payment, 375 loan amount. Definitely recommend our customers out there that may be shopping for a second home think conventional is the way to go. I promise you, conventional is not the way to go in this day and age on second homes or investments, especially at the higher LTV. Definitely when we get into this 75 LTV range, where we can compare side by side with conventional and non-QM, it might be more comparable. But like I just said, we literally can't quote a 90, even though it's legal to do so. It complies with the program. We don't have a compliant rate to quote there. So definitely recommend non-QM for all of the second homes in this case. So that's it for the demo. I don't see any questions here. So I guess we can go ahead and wrap it up then, Kyle.
Yeah, absolutely. And like you said, later this week, we're going to do the one-time construction close too, which definitely relates to this, but we'll save that for that show. So we do this show every weekday at 11 a.m. Eastern time, where we go through the different rates and then do a deep dive into a different topic every day. So thank you, everybody, for tuning in, and we hope to see you on the next episode of Daily Mortgage Rates Live with the Mortgage Calculator tomorrow at 11 a.m. Eastern. Everybody have a great day.
Thanks, everybody.